Hi, everyone. I'm Blaine Birch, co-founder and CEO at Dryrun, and I'm your host for Turning Point Podcast, stories and strategies from the world of business. And I'm really excited to have joining me today Shaheel Hooda, managing partner from Sprout Fund. Thanks for joining me, Shaheel.
Oh, you're welcome. Thanks for having me, Blaine.
And Shaheel and I have known each other for a little while now. And the one thing I know is you are a serial entrepreneur. You have almost an unending number of stories, and I've heard some of them, and but I'm excited to hear many, many more because I always learn so much from every little bit of insight you provide. But just to get started, can we go back to where was your first experience in entrepreneurship? Where did you get started?
So this is interesting because we have to go way, way back, right? I grew up in a very entrepreneurial family. So my family, my ancestors are originally from India, but my great-grandparents moved to East Africa in the 1920s during British occupation and were kicked out of the country in the 1970s. So after 2 generations of living in East Africa, because of nationalization, my parents had to flee the country and flee with nothing. And so we eventually ended up in Canada after hops in Pakistan, which is where I was born, and then London, England, where we weren't allowed to stay because we didn't have papers. So fortunately, Canada opened its arms, and in 1974, we actually came to Canada as refugees. And what I can say is that my experience, my first entrepreneurship experiences were as a result of growing up in a refugee immigrant family that needed to put food on the table. And so my parents, as soon as they came here, they started getting involved in, starting small little businesses, shops here and there, started investing in real estate with whatever excess capital that they had, which wasn't very much. And by the time I was 8 years old, we had moved to Saskatchewan. And my parents were now owners of a very large chicken farm, a motel, and they had just recently started up a rental car business as well. So when you're 8 years old in an immigrant family that's just trying to survive and has all of these businesses, you start to have a role. And so when I was about 8 or 9 years old, my father said to me, okay, it's time for you to take more responsibility. Realized that I was already at that time left to take care of the motel when they went off for a few hours at a time. And I was renting out rooms by standing on a chair. But now it was time to take on serious responsibility. So he sat me down one Saturday afternoon and he taught me how to do the books for the businesses. And I'm talking about 1980s. Where computers didn't quite exist yet, at least not the affordable ones. And so he taught me how to do that in a double ledger accounting book. And it was tedious work. We now had 4 businesses. And so it would take me about 8 hours each weekend to do that bookkeeping work for him. Remember, I'm only about 9 or 10 years old at this point in time. And I wanted to be outside and play with my friends and all of those sorts of things. And so when the first computers came out, the ones that were affordable, I convinced my dad to buy me one of those. And in today's dollars, that would have been about $3,000. So that was a big expense at that point in time.
Yeah.
And the first piece of software we bought was not gaming. It was actually the precursor to Excel. So it was called Swift Calc for the Commodore 128. And so I sort of learned how to use that myself, realized that you could do a whole bunch of things with formulas and that I could take the work that I was doing that would take me 8 hours, I could take it down to about 5 or 10 minutes each week. So that was just incredible. And what happened in that instance, when I look back on it, is I fell in love with the way that technology could be applied to streamlining and making business more effective, more efficient. And so, it lent itself really well to my internal laziness factor as well. Because I could do other things instead of doing that. So that was sort of the first experience I had, really being exposed to what it means to be an entrepreneur, managing cash flow, understanding the numbers, lots of lessons that I still sort of use to this day. And I have a really strong finance background because of what my dad put me through back then.
One thing that really fascinates me is so you were born in Pakistan. So you came to Canada. How old were you? Like
I was 4.
You were 4. Because the one thing that struck me was by 8 years old, which means you'd been in Canada for 4 years and your parents had 4 businesses, a hotel, I find that absolutely flabbergasting.
Yes.
That to be able to, like you said, they sort of started with some stores and this and real estate. That fast to be able to come to a new country and be that entrepreneurial and make that much progress that fast is honestly is absolutely staggering to me. I can't even imagine that. Like,
Yeah, and having two kids at the same time. Yeah, it's incredible. But what it is, it's about the work ethic, the desire to actually be able to do more for your kids, right? Put food on the table, but also to give them the best that you can. And when you start from nothing, you really have nothing to lose anymore. So it was really about take everything that you earn in one small business and multiply that as quickly as you can. And it's about spotting opportunities, which, you know, my father was really, really good at. And then it was also about leverage. You know, he came to Canada and he experienced this new capacity or this new tool called debt, which didn't exist back home in East Africa. And he really took advantage of that and multiplied what he was capable of doing. But, you know, it was also very challenging because using that tool in the 80s became a burden. You know, interest rates went up to 20%. And that actually almost killed many of the businesses that we were in.
Yeah. Yeah. Well, and there is a lot more than, you know, grit, determination and will and everything. There is a massive level of, like you said, identify an opportunity, but smarts and execution that has to be like to get 4 businesses off the ground like that. I just find, man, I got one. It's just, I know how hard it is. That is just, that is amazing to me. So was your father, was he an entrepreneur in East Africa?
Yeah, he grew up in a very similar type of family. So his
Okay.
father had a grade 5 education when he had moved to East Africa. And with that grade 5 education, he decided that he wanted to be in business for himself. He started up a soap and shampoo manufacturing business of his own by reading about it from German manuals and experimenting and then creating products and selling them to the local population. By the time my dad was in his 20s and he went away to school in Switzerland, he became a cosmetic chemist so that he could professionalize that business with the intention of becoming the Procter & Gamble of East Africa. So yeah, he grew up in that same kind of environment. When he was 8 years old, 9 years old, he was sent off by his father to go and collect from the wholesale accounts that they had, which is, you know, something really, really difficult, but it teaches you a lot, right?
Yeah. Yeah. Oh, it's amazing. I could, you know, we could talk for an hour on that because I find it so fascinating to have that kind of story. But let's fast forward a bit to, so
Sure.
now you've got this background, you've got this sort of experience. What would be the first time that you sort of ventured out kind of on your own, like something that you were, was sort of uniquely yours or, you know, with some partners or whatever, but away from the family? What was that first venture?
Yeah, so, you know, that would have been when I was in my undergrad here at the University of Alberta. And I was in my 4th year, and I was thinking about what I wanted to do after I graduated. Didn't want to join the family business. And so I decided to buy an underperforming retail business and said, you know, I think I'm smart enough. I can probably turn something like this around. And my father was, you know, really, really encouraging, really supportive. And so I bought that business, made a lot of mistakes in the acquisition of that, got screwed over by the previous owner. And about a year and a half into that, realized that that business was never going to make money. Either I was not smart enough or the business was just not set up and structured to be able to make money. But what I had learned over the process of running that business for a year is that there was one product line that was doing really, really well. And it was a product line that we created ourselves. We just taken advantage of the market opportunity at that point in time.
Yeah.
And so we created this novelty line of t-shirts, started selling them. They were selling like really, really well. The margin was fantastic. And I started leveraging some of the relationships that my father had for distribution across the country and started wholesaling to those suppliers. And that started taking off. And ultimately what happened is that line of clothing was acquired by one of those distributors. And it allowed me to escape out of the business that I bought, you know, under the guise of trying to turn it around. And that turned out to be my exit there. So I didn't make a ton of money, but it was enough to just basically buy out the lease, shut that business down. And then, you know, I got accepted to do my MBA in the US, and it was enough money to actually pay for the first year of tuition for my MBA as well.
Oh, wow. Nice. So where did you go to school down there?
So I went to a little school called Harvard in Boston, and I did my master's of business administration there.
Okay. I should have known that. I should have read that. That's, you got to go way down the profile to get to education. And I never bother to look because around here it's, oh, I went to U of A or U of T, so that's had to have been quite an amazing experience.
It was. It was an incredible experience. It was during the beginning of the dot-com heyday. And so really what it was about is getting exposed to an entirely different world, right, in the technology space that was just starting to take off, as well as a completely different way of thinking about business. Up until then, all I had ever been exposed to were small businesses that were regional in nature. And all of a sudden, I'm in this class with 80 other people, many of which have done some incredible things. I was definitely not in my element, but the amount that I learned and the way that it changed the way that I thought about doing business in a global sense, and that anything is possible. There's no shortage of capital in the world. There's no shortage of opportunity. It's about as big as you can dream. And then whatever work you're willing to put into it. I really got exposed to that there. I wouldn't say that I learned a lot about business while I was doing my MBA. I think I learned everything I needed to know about business from my father. But what it taught me about was the different types of businesses that are out there, as well as getting me connected into the technology space and opening my eyes to that.
So following on that, did you come back to Canada right after that, or were you off somewhere else, or what did you do?
Yeah, so I actually got recruited by a strategy consulting firm called McKinsey and Company. And I needed to polish up my resume, not because I wanted to go work for a big company, but there's sort of imposter syndrome when you come out of a program like that, where everybody else has these incredible experiences and I'm just this small business guy. So I decided to take the offer from McKinsey, primarily because they put me onto a project they committed to early on. It was the launch of the first online bank in Canada. So I got to be an entrepreneur in the tech space within a large organization like McKinsey and launch something completely new without having to invest my own capital. It was the capital of the two partners that we put together in that case. Great experience over the course of the first year of putting that together.
Yeah, yeah. And that was what year would that have been around?
That would have been 1997, 1998.
1997, 98. Okay. I'm just trying to think of the changes sort of in fintech and how they kind of came along. So when did you, so you took that experience of kind of working with someone else's capital or that sort of opportunity. What was the next venture? Did you step out on your own at that point and say, okay, I'm going to build something myself, or where did you go from there?
No, I realized that what I wanted to do next is I wanted to really get into the technology space in a much bigger way. And so then I got recruited down to the US. I joined a company out of Austin, Texas, super high growth enterprise technology company. And I was thrown into the role of VP of Business Development. Didn't know anything about business development from a technology perspective. And I was in charge of the automotive sector. Again, didn't know anything about the automotive sector. 26 years old, and I had a budget of $10 million to manage and build a portfolio of a $100 million company. And I spent the next 2 years there really learning what it takes to build a technology company and to grow and scale something like that. But more importantly, how do customers buy and what is it that you're selling them? It's not about the technology, it's about the solution to a problem that they have. So I spent the next 2 years refining that. Then I came back and took over a software company in Canada after sort of 9/11.
Okay.
And so that's where I really learned how to be an entrepreneur from the ground up. I took a company that had a little bit of funding, but it had no product, didn't have any customers. It had a team and they had a burn rate of about $40,000 a month. And I had to figure out how to turn this thing into something real that investors would want to invest in. So I spent the next 5 years turning that business around, repositioning it, retooling it, getting rid of a lot of team members, hiring some team members that had the right skill sets. And we actually took that company to profitability over the next 5 years. We also raised about $7 million for that company.
Wow. So really, like, it's interesting how you've changed sectors, you've changed opportunities, but there must be some common threads that led you to be able to take on an opportunity like that. Like, to go down to Austin, 26 years old, here's $10 million, help us grow. And all of a sudden now you're taking over a business. Well, now these guys don't even have a product. what were some of the common threads that helped you pull all of that together and make them successful?
So I think, again, it goes back to my upbringing. Remember I told you about my father? Well, he's 72 years old today. He's now on his 47th business. Many of those are in different sectors, everything from farming to hotels to retail to land development. What I learned from that was, and from that upbringing is, you can learn about any industry. You can learn about any business. It's up to you to decide whether or not you're afraid to do that or not. And so, when I was younger, I wasn't afraid. I had confidence that I'd gained from my upbringing. And you always say yes. You never shy away from a risk or from an obstacle, from an opportunity. And then you just throw yourself 110% into it. There isn't an obstacle that's too big to overcome. So I think those are the sort of the critical threads, but I think there's another one, because that kind of gives me too much credit for being smart or confident or intelligent. But I think that there's the corollary of that as well. It's not thinking things through enough, not really understanding the risks associated with whatever you're getting into, and jumping before you analyze it to death. And so being a little bit stupid and being a little bit naive, I think, is also a critical element of being an entrepreneur.
Yeah. Well, I think I might have that in spades, because if I had known what I was jumping into with this thing, I've talked about with so many other, especially tech entrepreneurs. And, it seems like we all had the same idea. Oh, jump in, it's easy. You make a product, you'll be profitable in 6 months, you'll be rolling in it. And then you sell for $1 billion within 2 years. And
right.
Never seems to quite happen that way. And we always joke about, you get so far down the path, at some point you look and you start to realize how risky it is. You're like, well, too late now. And,
or I can't believe that I did that. Right.
Yeah. And the other thing is you'd never do anything else. That's the other thing.
Yeah.
It's like, I know full well, that's just, you'll never do anything else. And
absolutely.
I want to dig in a little bit on, I guess, in a little bit of detail on, so you went into a company here. They had a team, but they didn't have investment. And you mentioned they didn't have a product. How did you go about identifying, because we always talk about that product market fit, and how do you find that? And how do you find something that's not only product market fit, but something that's also investable as a product market fit? How did you go about doing that?
So I wish I could say that I had this really sophisticated rubric and process for figuring that out. Today, after having looked at hundreds of companies, advised hundreds of companies, invested in a number of them, and run a number of companies, I could say that I think I have a better process today. But back then, it was really simple and very unsophisticated, which was, coming from a small business background, what is the lifeblood of any business? It's sales, it's cash flow, it's getting to revenue, and it's getting to break even as quickly as possible, whether it was technology or something else. And so what I did is I just looked at what I was taking over as a business, which was a B2C play in 2001, 2002. It was still a B2C play at that point in time. It was using machine learning, which nobody had heard of at that point in time. And it was trying to create a mechanism or an agent that would follow you around on the internet, would learn about your interests, and then would make recommendations of things for you to buy, okay? Now, if we look at something like that idea today, makes a ton of sense. But back in 2001, it didn't make any sense at all. We were still living in a world where bandwidth was not high speed, and many people still, dialed up in order to connect to the internet. So it was a very different time. That was a company that was way ahead of its time. And the challenge with companies like that is they either need to raise a ton of money so that they can survive for the next 5 to 10 years for the market to catch up to them, or they need to pivot. And when I took over the company, I looked at that and I said, I don't see how we're going to be able to build this without raising tens of millions of dollars, and that's not available here. We need to pivot. So I then looked at my own lessons of the previous company in the US and said, okay, I know how to do enterprise sales. I know how to solve problems for enterprises. I see this as a technology that if we were to pivot and retool, we could take it to enterprises and we could probably sell it. So what did we do? We just put together a PowerPoint deck, started going out and talking to companies, and starting to pitch, you know, a mock or a wireframe of what this thing could be. More importantly, what it could do for them, what value it could provide for them. And fortunately, that message started to resonate. We started to get some really good feedback, not necessarily initially, but over time, we started to get some good feedback, we refined the message, and we started to get customers like RBC, which was one of the largest banks in Canada, to say, okay, yeah, this is something that we're willing to pay for. And we're willing to pay hundreds of thousands of dollars for this, which we couldn't believe. So it just became this, you know, go out and talk to as many customers as you can, start to identify the pattern, and then build that thing that they actually want to pay for because it has value.
That, you know, it's interesting because it does feel like, you know, like you said, you have probably stronger processes but that feels like a very well thought out approach and process to especially to doing a pivot. And you know, you brought up something that I know a number of my guests over the last, in fact, Scott Rusnick was just a couple of episodes ago, brought up, and that was timing, and the timing of a venture. And he had talked about a venture that actually failed, and they had some great traction, but the timing was a little bit too early, and then a technology sort of came out and upended them almost overnight. And it was just, it's amazing how much timing has to do with the venture succeeding.
Absolutely, 100%. I would say that timing is probably 50% of a company's success. The other 50% is the team and their ability to adapt and see what's going on in the market and the momentum around it, and to be able to zig and zag. Because my experience is that every company that I've run, in the technology space in particular, you've had to, what we call pivot today. Back then it was more, you know, twist and turn and navigate maybe 5 different changes or iterations of the business before you actually figure it out. And so the key is to have enough funding to be able to navigate those twists and turns 5 times before you get there.
Yeah. It reminds me of this friend of mine. This is years ago in business, but it was right around the time where, you know, buzzwords always came out, and you weren't allowed to have problems. You were only allowed to have challenges. And I remember I don't remember who we were talking with or whatever. All I remember is him looking at someone and saying, because they said something about challenges, is we don't have challenges, we got problems. And it was what I appreciate about it is it was such a concrete observation that cuts through some of the rhetoric and everything. Is just like, no, you got sometimes you just got problems you got to overcome. So I guess I'd like to actually dive into a little bit of what, at this point, you know, you're in this a number of years ago still, what was one of your biggest challenges in this process with some of these sort of early businesses before you got to where you are today?
There's so many challenges, Blaine. We could talk for hours about the different challenges. I think I've been involved in 15 or 16 different businesses so far.
Okay.
Some successfully, many not, right? So let me talk to you about a particular challenge with the second software company that I took over back in 2010, I think it was. And this was a construction software company. Really strong team of founders in terms of domain expertise. So they came out of the construction space, particularly construction of very large projects in the oil and gas space. So multi-billion-dollar facility construction projects. And those projects typically tend to go over budget by 2 or 3 times, and they typically take twice as long to actually construct.
Mm-hmm. Yeah.
And so these guys had, through their experience, they had managed projects like that through, you know, their consulting activities, and then decided to turn that consulting and productize that into a piece of software. Mm. So, you know, they pulled together their own capital. There were 4 founders. They created this company. They started to get a lot of interest, but no sales, no revenue yet. And they were now going to embark down this path of trying to raise some capital from friends and family and others. And I was mentoring them through one of the hats that I was wearing in the ecosystem. So I spent the next, I think, about 6 months mentoring this company. You know, and what that meant was actually going out to potential customers with them, going out and talking to potential partners, and really trying to validate whether there was a market opportunity. Well, fast forward, things started to look really promising. help them raise the capital that they needed to raise, a couple $1 million through a seed round. And one of the conditions of that seed round was that they needed to bring in a professional CEO. And so they tapped on me because we had built that relationship and they needed some adult supervision. And so I got involved with the company, and it was great while I was mentoring them. It was great for the first few months of being the CEO of this company because I continued to raise some capital. I actually helped them negotiate the first partner deals that translated into about $1 million of revenue in the first year of me being there. And unfortunately, though, there was a lot of really interesting dynamics behind the scenes between the partners. And I was not aware of that until I got, deeply embedded inside this organization. And what that ultimately resulted in is the partners starting to get overexcited about the initial traction that we were getting in terms of revenue and partnerships. And they thought that it was a lot easier to raise capital because I was involved. And so they thought, okay, raising capital in the future is going to be easy too. And so they started to spend on what I consider vanity purchases. They started spending on leasing vehicles for themselves because they all needed vehicles to drive around with our logo on them. They started negotiating the rights to name the building that we were in. You remember, we were a startup company that was not yet profitable, and they were just writing checks behind my back. And it was a great lesson for me that I had not done a good job of A, vetting the partnership and the dynamics between the partners, and B, that I didn't have control over the board. I didn't have control over the purse strings. I didn't set that up properly. So great learning that came out of it. But the ultimate result of that is I had to sit down with this group of 4 founders that had the majority position and have the come to Jesus meeting with them, which is, look, guys, we have made commitments to our investors that we're going to do X, Y, and Z with the capital that we've raised. And you guys are going off and spending 20 to 30% of that in things that we don't need to be doing right now. I'm not going to raise another penny for this company. I'm either going to be the one that's in charge of this company going forward. I write the checks. I sign the checks. Or you guys can continue to do that, but I'm leaving. And we can negotiate my exit package because I've already earned out everything that I needed to based on our original contract. And so we went back and forth for about a month and a half. And I really thought that they were going to turn around. They were going to say, okay, yes, this is what we need to do. And ultimately they came back and they said, no, you know what, we want to continue. We think this is going to be way bigger than you do. It's going to be a lot easier to raise capital. And we don't want to give up control. And so they thought I was bluffing, and I wasn't. So I basically just walked out the door that day. It was probably the hardest thing that I've ever had to do in my life because it was the biggest deal that I'd ever been involved in my life. And I had carved out a substantial equity stake as a late co-founder into this company, and I had to walk away from that. So one of the most challenging experiences in my life. Really tried hard to turn it around. I spent the next couple of months working with their lawyers to try to convince them that what they were doing was the wrong thing. But I obviously was not persuasive enough.
Yeah. And that's, it's a hard lesson to have. And it's, it's amazing. And I guess that's why you always talk about team, because that's what it comes down to. And a team with the same, it's, years ago I'd hear vision, mission, this, they were just kind of words, but that's not what it is today. Like having people with that same vision and the same mission and the same ideals and the same drive and is so important. And it just, that feels like it's just was a no-win situation because you're not going to change people if that's what they are, right? So
and they're not investable as a company, right? Because those team dynamics are never going to lead to a governance structure, a board environment where they're going to take feedback and they're going to be partners with their investors. They're going to be partners with the board members. And so ultimately the company did fail. I'm not glad about that, but it did fail. Fortunately, I was able to exit out of that and actually made some good money through that exit by selling my shares back to the company.
Yeah. Well, and it's, I didn't even ask, honestly, I assumed it just that you told me that sort of, lack of vision or personality or whatever in a company. And it just like, I just assumed, well, they're not around anymore. I never asked. It's like you confirm that just my assumption. But cause it just doesn't feel like a winning combination, I suppose. So it's business is hard enough, but to have a misalignment like that just doesn't sound like it would work. So, so where did you go from there? Because that would be just one of those. Did you take a break at all for a bit, or did you go into the next thing?
Yeah, it was a very, very dark time in my life. I will be honest to tell you that I did go through a bout of depression for the next few months
Hmm.
because as an entrepreneur, your entire identity is wrapped up into what you're building, right?
Yeah.
And I didn't know what I was going to be building next.
Yeah.
So it was really hard to walk away from that, to walk away and feeling like you had failed. And for the first time, failed in such a big way that you didn't know what the future held for you. But fortunately, with the support of a loving wife and kids and parents who had been through these kinds of things before, got through it and bounced back, started advising companies in a more aggressive way. Came across a really interesting company that I started mentoring, became the first investor into that company, realized all of the lessons that had come from that previous experience, made sure that we put the right governance in place, evaluated the team at a much deeper level before I even wrote that check into that company, helped them raise capital. And that company has gone from being worth about $2 million in the early days to 5 years later being worth over $60 million today, raised a Series A round. So I had a whole bunch more learning experiences of not just raising capital from friends and family and angels, but now going through a Series A round, being on the board of a company like that, helping that grow, dealing with the challenges that they as entrepreneurs were dealing with. And so I've kind of turned that into the second chapter of my life.
Hmm.
So I'm less of an entrepreneur now. I'm a pretend entrepreneur, and I pretend to help entrepreneurs that are trying to build their dreams, build their companies, and hopefully they can leverage lessons from many of the experiences that I've had in my life.
Yeah. Well, and that's it's such an important, because I know like you've been such a help to us as we've been trying to figure things out and get the right direction and grow and get traction and everything. And it's one of the mistakes I made when I started Dryrun. I had come from another business and sold it and had those some of those feelings of now what do I do, and where do I go? And it made sense, but it was still, you're just kind of going, well, now what? And the phone's not ringing, the email's not coming in, and you're just kind of like and probably part of what Dryrun came, I always say it's 40 cups of coffee, 40 beer to entrepreneurs to figure out Dryrun. Looking back, it was probably a little bit of, I just want to go for coffee with someone too, because I'm not inundated with stuff every 3 seconds of the day. Right.
Right.
And but I think one of the mistakes I made with Dryrun, and probably part of the experience I'd come out of the business before, was I just felt like I was doing it on my own. I wanted to do this on my own. And, for the first couple of years or whatever, it felt like I was sort of doing it on my own. And as soon as I started to get, more like advice and mentors and advisors, and, that's, I think, when things started to accelerate for me and started to accelerate from my learning and understanding and where I was going, because, I realized how valuable it was. And I realized that I was talking to a lot of entrepreneurs, but I probably needed someone that was a little bit more in an advisor or mentorship role than my buddy across the table that's struggling through business as well. That's really valuable. But the gap I was missing was the advisor and the mentor angle. And so now today, I'm part of I have 4 mentors with our VMS group out of University of Alberta that we value, like I value so much, different sets of advisors. And then of course, those friends and that are especially in the tech space that, you can still have a conversation with an entrepreneur that's in the same space. Is a different conversation. So having that whole scope of conversations and people to rely on makes a massive difference. And that's something I would always say to entrepreneurs now when they're starting out. Don't try and do it on your own, or go and find those people that know a lot more than you and have those experiences that are so valuable, and work with them and share with them.
Yeah, being an entrepreneur is an extremely lonely role to play, right? Many things that happen in the business you can't talk to your team about. You can't talk to
Yeah.
your spouse about, not because they're not willing to listen, but they just don't understand. And so that whole journey of being an entrepreneur, the ups and downs, the roller coaster ride, because your entire identity and your life and your energy is all connected to that. It's all dependent on that. When things are going up, you have these incredible highs. When things are going down, it pulls you down mentally as well.
Yeah.
And so if you're alone doing it, if you're not surrounding yourself, if you don't have the support system, it's devastating. It's devastating. And so you absolutely have to, as an entrepreneur, surround yourself with those people that are willing to listen, not necessarily that know what the right answer is, but have an ability to listen and ask some critical questions and be objective about what's going on as well.
Yeah, yeah, you're so right. And it is that it is a lonely position a lot of times. And even when you have partners, it can be a bit of a lonely position at times. And you know, and I've probably mentioned this on some other podcast before, but it's a friend of mine. I still remember and he's a very successful business, does some great things. And we went for beer one day, and he comes in, he sits down at the table, and he just looks at me and says, "So you talking me off the ledge, or am I talking you off the ledge?" And it was just, you know, it doesn't matter what stage your business is in or what it's a struggle every day. And it was just, it just kind of made me laugh because it's, you know, yeah, you know, you always have the feeling like, God, he's got things really rolling in that. And no, it's challenges. It's just challenge after challenge. And it's true. And nobody identifies with it like another entrepreneur. And in fact, I always say with our show here, it's not like we're not looking to have 1 million people listen to this. It's going to be entrepreneurs that listen to this. It's a deep dive on entrepreneurs, because entrepreneurs, we want, you know, I want everyone here to feel like they're you know, they're part of a community, and that's you'll never see, you know, you can sit down with an entrepreneur anywhere, any place, anytime, and dive right in like you've been friends for decades, because there's just so many shared experiences and shared battles. So it's something I always appreciate.
Yeah. So lots of challenges. You're absolutely right. But I don't think any of us could do anything else.
There's not a chance.
Life would just be too boring if we didn't do this.
Yeah. No, once you're in, you're never going back. Like you're just, it's like, you know, a friend of mine said, it's like your dog off a leash. You can't go back. You're ruined for life. And I wouldn't do anything else. And I don't know any entrepreneurs that would. But boy, we didn't pick an easy one, I guess, either. So that's just sort of how it goes. What I'd like to do is fast forward a little bit to where you are today. And because that's where, you know, I know where you're from is your role as managing director at Sprout Fund, and kind of where you are today. Tell us a little bit about that.
Yeah, absolutely. So like I said before, the first chapter of my life was, you know, sort of family business, small business, non-tech business. The second chapter was migrating into the tech space and learning about how to build tech businesses. The third has been advising tech startups and entrepreneurs and growing those. And then I started dabbling and investing in some of those companies as well, and have lost some money and have had some really good outcomes with some of those companies as well. And so about 2 years ago, my partners and I, let me take a step back. 2 years ago, I was approached by a group of 3 partners who were looking to set up a venture fund, a micro venture fund focused on Western Canada. Small fund, and they were looking for me to invest in that fund because they knew that I was an angel investor in a bunch of different companies. And I looked at what they were doing, and again, this is the sort of spotting the opportunity. I said to them, I love what you guys are doing. I definitely want to be an investor, but I actually want to be a partner in this as well, because I think I can add a ton of value to what you guys are doing. And I think I can bring to the table a whole bunch of other angel investors that would invest in this fund, because I want to build a fund of my own, and I've been looking for the partners to do it with. And so they graciously said yes. I guess they knew my reputation. We knew each other quite well. And so we've been on this journey for the last 2 years. We started up a small fund. The original intent was to invest just in Edmonton-based companies or Alberta-based companies. We found that there was a lot of opportunity in Alberta as well as outside of Alberta. And so we've made 9 investments so far, one being your company. In fact, yours was the first company that we invested in as a fund.
Was, yeah.
And our model around it is to invest in companies at the right stage. They've got a little bit of market traction, but they're looking for more than just capital. They're looking for mentor capital as well, not just venture capital. Because we believe, maybe rightly or wrongly, that we can add a lot of value in helping to accelerate the growth of these companies, as well as providing access to our network of other investors that we've been building through our own careers. And so we try to help those companies raise follow-on financing as well, like yours.
Yeah.
So that's what we've been doing for the past 2 years. The intent with the first fund was always to use it as a pilot. It's an MVP. Lots of things. We had a lot of assumptions, and we've tested many of those assumptions. Some are right, some are wrong. We've now got a more refined investment thesis and hypothesis. And so we're in the process of now creating and launching our second fund, which is going to be at least a $30 million fund. And we've got interest within the first 6 weeks from investors in our first fund, as well as many investors in the US, for about $10 million already of that 30 million. So that's what we're on track to set up and launch in early 2021.
Oh, it's terrific. It's hadn't even heard that, and we talk fairly often, but never get onto that topic. It's yeah, and being a Western Canadian based company, it was really gratifying to be able to because your whole team there's so experienced and there's so much expertise there, and to be able to tap into that and do our a lot of our first round in like kind of close to home was really great, and that experience was absolutely essential, because I know we likely have another round coming up fairly soon here, and it's going to be probably a little bigger and a little further afield. And it was it's hard for me to imagine someone going through, like when I see entrepreneurs going through raising a round and trying to do it on their own. I can't even imagine how they did it, because it was tough. It was quite an experience, and that was with so much support from you guys and from my other mentors and advisors, and it was still a real challenge. And so it's that's one of the first things I mentioned to people, startups, when they are talking about raising a round is, find some advisors, find some mentors that you trust and that can help you with that, because it's a tough road and a long one.
Yeah, it is, absolutely. It becomes easier if you know what those investors are looking for, right? And you can craft your business strategy and your narrative around that in a way that conveys excitement, but sort of matches what they're looking for. It's very similar to dealing with customers. When you're dealing with a customer, you're not selling them a piece of technology, you're selling them a solution to their problem. It's the same thing with investors. Investors who have a fund and they're professionally managing other people's money, they have a problem too, which is that they need to find good companies to deploy that capital into that will generate the kind of return that they need to see. And so if you understand their business model, if you understand the problem they need to solve, and if you have a solution to that problem, which is a great company that maps well to that, then it becomes easier to raise that capital. But you need to understand that. And most entrepreneurs don't, right? They just think, I need money. They go to talk to an investor. I need money, Mr. Investor. And that's not the right way to do it.
Yeah. It's it's a world in itself, and it's I know how tough it was even just to be able to try and somehow run a business or manage it while raising funds. It was like, I feel like I disappeared on the team for a year. That's what it felt like. Just like, well, see you guys later. And it's it's a challenge, and I know it's likely coming up again, and hopefully I handle and balance things out a little better the next time through. But it's the experience is unbelievable. It's something that hopefully I can help entrepreneurs in the future too, that are going through the same thing, just learning a bit from my mistakes, hopefully. So, well, thanks so much for joining me today. We could go on for hours, but I suppose everyone has to probably get back to work. A bunch of entrepreneurs listening here. So Thanks so much for your time. How can people find you if they're looking for you, want to reach out or learn about Sprout Fund?
Oh, well, they can just look for me on LinkedIn. They can also reach out to us on Sprout Fund, so at sproutfund.ca. We're actively, making investments. We've got some more investments that we're going to make out of our first fund, and our second fund will be ready in early 2021. We'll be looking for seed stage companies that are generating at least $10,000 a month in recurring subscription revenue. We're focused on B2B companies that are Western Canadian focused or based.
Terrific. So, you know where to find you. Again, I'm Blaine Birch, co-founder and CEO at Dryrun. We help companies manage their cash flow, scenario model, and understand where they're headed and how to make better decisions. So if you're looking for help on that, please come visit us at dryrun.com. We would love to talk with you. Thanks so much, Shaheel. Appreciate it.
Thanks. Take care.